Yo, did you know that I failed at trading for 2 years until I understood how to fully develop a top-down analysis? 97% of the traders fail because they do not know how to play with time frames. In this video, I'll show you step by step how I do my top-down analysis every single day in these markets so you can start making money today. With that being said, let's get into the video. So, what exactly is a top-down analysis? Well, as the name says, we have to go from top to bottom, right? So with time frames, we have to see the big picture in the higher time frame, aka the trend, the bias of the day, where's the price going, is it going up or down? And in the lower time frames, we have to be entering. It's like a big puzzle that we need to solve, so then we can take a trade and make a lot of money every single day. So let me show you what time frames do I focus on, what I recommend you to be focused on. So I'm gonna keep it simple. We're gonna be focused on daily, 4-hour time frame and 1-hour time frame to see the overall bias, to see the overall higher time frame perspective, so that we can then go to the lower time frames such as 30 minutes, 15 minutes, 1 minute, and also 5 minutes. But essentially, the time frame that I enter from is 1 minute time frame. I always enter my trades from 1 minute time frame, but that doesn't mean that's the only time frame that I use. Most traders fail because they just stuck in one single time frame. You cannot make money if you just master one time frame. You have to see the big picture first, and then you can implement that to the lower time frames and take a trade. Alright, so these are mainly the time frames that I focus on. Like I told you, these right here on the right, I tend to be focused on for the big picture, for the whole bias of the day, to actually see the big picture. And you're gonna understand more about later into this video why I watch these first and then move on to the lower time frames. Mainly I focus on the 1 minute time frame for the entry, and these I check the whole bias, and also I can check these for the bias, right? Now, in order to understand exactly how to trade with these time frames, how to play with these time frames, we have to master the lifeblood of the market, which is the market trend. If you don't know what market trends are, it's literally how these markets are built. It's how these markets move, uptrend and downtrend. So the way that uptrend moves is very simple to spot. It moves in higher highs, higher lows, higher highs, higher lows, higher highs. As you can see, this is how the trend moves when we're going up. So in this kind of scenario, we have to be looking for buys because we have to just think with the odds. The price is most likely going to continue up, so we have to follow this wave to the upside, right? And then there's the downtrend. Low lows, low highs, low lows, low highs, low lows. Okay, we have to be looking for sales in here because the price, the big banks, institutions, and hedge funds, they are moving the price to the downside. Now, as you saw, the trend has two parts, big move and a small move. If this is a uptrend, the big move is obviously an impulse, and the small move is called a retracement. This is the retracement, impulse, retracement, impulse, right? That's very simple, looks like a pattern. That's how it works, okay? Impulse and retracement, right? The price has to fix itself in the retracement. And then there's a downtrend. Impulse, big move, and then there's a retracement, small move. Impulse, retracement, impulse, retracement, impulse. That's how it goes. And the reason why we have to understand about these impulses and retracements is because every single time that there's an impulse and a retracement, that's when a high appears, because essentially a high is being created when there's an up candle followed by a down candle. Now, why do we need to know what is a high? Because when a body of the up candle after that breaks above the most recent high, closes above the most recent high, which is this one, that's a break of structure, BOS to the upside. And why is it important? Because if this is a lower time frame, in the 1 minute time frame, we can essentially buy from here. We can buy the markets after the break of structure. Simple as that. However, now that we have to understand that, we look at the higher time frame as well. A break of structure indicates, are we bullish or bearish at that specific time frame. So if the last time it broke structure was to the upside, we are currently bullish in that specific time frame. Now obviously that may sound like rocket science, but don't worry, you're gonna understand very soon what do I mean. Because in the higher time frames, you have to see, is it bullish or bearish, and the lower time frames as well, etc, etc. But obviously to the downside, a break of structure looks like this. When there's an impulse, retracement, impulse, that's a break of structure to the downside, because down candle followed by an up candle, that's when exactly a low appears. And when the down candle body after that closes below the most recent low, literally the body of the down candle, the fat part of the candle closes below that, that's a break of structure to the downside. And why is it important? Because that also tells us that we can enter from here if it's a lower time frame. Let's say this is a 1 minute time frame, break of structure continuing with the trend. We can sell from here to the downside because it's a downtrend. And also a break structure tells us are we bullish or bearish in that specific time frame. So if the last time it broke structure was to the downside, it is bearish at that specific point. Alright, so let's say this would be our daily time frame bullish uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You would guess that we have to look for buys. Well, almost, but not necessarily. We have to understand that we could actually be bearish on lower time frames, which most likely in this case we would, because as you can see, remember how the trend moves. This is the higher highs, higher lows, aka impulse, big move, and then there's the retracement, small move. Impulse and retracement. So do you understand that this retracement in the daily time frame, just that mini retracement, could be a huge downtrend in the lower time frame, such as 1 minute time frame. That's why most of the traders fail, because they would short on the 1 minute time frame, which essentially you could make money from that for sure. But what they don't realize that once it hits a certain point where the price wants to continue to the upside in the higher time frame, then they would get stopped out in the lower time frame, if that makes sense. And right here, as you can see, this is a 1 minute time frame downtrend, right? You would think that we have to look for sales. Well, technically yes, but like I just showed you in the daily time frame, this could just be a daily time frame retracement, aka that small move. Now, by all means, in the 1 minute time frame, I would still enter to the downside if this continues to move to the downside in low lows, low highs, low lows, low highs, low lows, like this. Okay, I would look for sales. However, I would target the areas that could switch the trend to the upside, meaning that the retracement would turn into an impulse in the daily time frame, if that makes sense. Because remember, the daily time frame in this case would be bullish. We have to be prepared that the price may then switch to the upside to the original trend. That may sound a little complex, but believe me, this is so simple. We just have to understand and master the market trend. If the daily time frame is, for example, bullish and there's a retracement, that mini retracement could look like a huge downtrend in the 1 minute time frame, but by all means you can still sell in the 1 minute time frame, but just be ready that the price could reverse and go to the original trend of the daily time frame. I know I kind of repeated myself, but I have to, because we have to understand that top-down analysis is one of the key pillars of trading. If you do not know how to play with time frames, you'll lose forever. Okay, that's why if you didn't completely understand, watch that part again, because it's very important. But let me show you in the charts right now. If I go to the daily time frame, as you can see, perfect example. Daily time frame is very, very bullish. Okay, very, very bullish. All right, how is it moving? Higher highs, higher lows, higher highs, higher lows, higher highs. Now you would think that since the daily time frame is very bullish, as it is, as you can see, it's very, very nice bullish uptrend, you may think that, okay, we have to then look for buys because it's very bullish, but not necessarily, because look at this. This daily time frame is retracing, meaning that it's creating that small move to the downside, which most likely will continue up later. But right now, there is potentially selling opportunities in the lower time frames. If you look at right here, this is what I talk about, okay? It's literally a huge downtrend in the lower time frames. In the 5 minute time frame, it looks like a massive, massive downtrend, but in the daily time frame, it's very, very bullish. Now, you can still, by all means, look for sales in here if it continues to respect this downtrend in the 5 minute time frame, in the 1 minute time frame. Look for sales, but be ready that the price may switch. That's why you should target some areas of liquidity, some areas of order blocks, fair value gaps. I have a bunch of videos on that. If you want to check them out in my channel, you can check it after this video. But this is very advanced stuff, okay? Top-down analysis, very important to understand. If you do not understand, you have to understand it, right? In this case, I would look for sales, okay? I would look for sales in this current time frame, unless there's I take my words back. We just literally took a 1 hour time frame low, which could be the turning point for this downtrend in the lower time frames to turn into an uptrend, aka the original trend, which was bullish in the daily time frame. This is very complex, I know, but it's not that complex. Once you understand it, you're set for life, right? So look at this. It is going down. Now this liquidity could be the last straw for the price to continue in the original trend of the uptrend. Okay, right? It's very simple, and the session is not open yet, but today I might look for buys if we continue to respect this liquidity and start to trend up. So understand this, the big picture, the daily time frame, the 4-hour time frame, the 1-hour time frame, it tells us the big picture. It tells us the overall movement of the price, whether is it going up or down. All right, and the lower time frames such as 30 minutes, 50 minutes, 5 minutes, 1 minute tells us the confirmation. We can potentially enter from there, but I like to enter from 1 minute time frames to see that last straw. Now we have to understand that if the daily time frame is bullish and it is currently retracing, doing that small move, that small move could look like a huge downtrend, and it's most likely gonna then later continue up once it takes some lower time frame stuff like order blocks, liquidities as which you saw there, and then after that it is most likely going to respect the original trend, the higher time frame. Remember, these prices, they respect the higher time frame, and we have to be clever enough to put these pieces together to solve the puzzle. Okay, trading is nothing. Trading is just a puzzle. Okay, it's just a big ass puzzle that most people cannot just comprehend. They do not know how to put the pieces together, but with top-down analysis we can do that pretty much. And top-down analysis trading brought me the freedom. I mean, look at me, I'm just chilling in here. I'm not flexing, but I'm just here to show you that it's possible. Now that you understand time frames, you have to understand how to actually start trading, how to actually take your first trade live in the markets. So click the first link in the description, the free course, 1 hour long, and then after that join the free Telegram from the link in the description as well. Alright, comment down below, like, subscribe, share this to a friend who you want to succeed, and as usual I will see you on the other side. Peace out.